The best EMA trading indicators in the 4-hour chart for swing trading. Forex swing trading strategy. A practical tool for identifying trends is the moving average. These are curves that are plotted on charts representing an average value of price movement over a certain period of time. To maximize profits on 4-hour charts, traders should utilize the exponential moving average, also known as the EMA, because it reacts faster to price changes and provides more accurate signals than just the simple moving average. Please stay till the end and work on the discipline needed for trading. Like and subscribe. One of the most exciting aspects of Forex and crypto trading is taking advantage of the opportunities within the moving average zone. The moving average zone is where multiple moving averages converge, providing strong support and resistance levels for traders who want to establish their positions. For example, let's say you've noticed that two particular types of moving averages, let's say the 50 EMA and the 200 EMA, have crossed paths on your selected currency pair's 4-hour chart. In this scenario, these converging lines could form a critical juncture or zone where price action demonstrates increased volatility and trend reversals might occur. In an uptrend situation, the price will typically remain above the moving average, indicating that the bulls are in control. To optimize your entry points for long positions, you should look for moments when the price dips towards but does not breach the moving average. And you can see here in the diagram that where the price approaches the moving average is also where the underlying oscillator approaches an oversold zone. On the other hand, in a downtrend situation where sellers dominate and push prices down below the moving average line, short selling opportunities can arise. Identifying cases when prices pull back up towards but do not cross over. That same moving average allows us to enter into what's called short selling orders at more expensive levels before resuming in the downwards trend. If you take a look at the diagram here, the point that I would probably have entered, you also see it coinciding with a regular divergence in the oscillator below. To maximize profits on 4-hour Forex charts, traders should develop a complete trading plan that includes using price action to identify strong trends, buying uptrends at a low, and selling downtrends at a high, and implementing effective trade management strategies, such as setting stop-loss orders and trading high risk-to-reward ratios. As a Forex or crypto trader, you can utilize price action to identify strong trends and make profitable trades by doing the following. First, start with studying the historical prices. By analyzing past prices, you can identify the chart patterns and any clues indicating where the market might move next. You can see here in the diagram that we've highlighted the different areas of support and resistance. Look for areas of support and resistance, especially key levels that occur at the extremes, as you can see again in the diagram in the background. Use multiple time frames. Intraday chart time frames, such as the 4-hour, can provide additional confirmation to your daily chart trading strategies. You may use other frames as an entry, lower frames such as the 1-hour, but the 4-hour might be a confirmation chart that you depend on for that. Watch for trend reversals. When a trend begins to weaken or breaks a major level of support and resistance, it could be a sign that the trend is about to reverse. You can see here in the background in the picture that a trend line's been broken. That could be a sign that a reversal is possibly taking place. Read candlestick charts. Candlestick charts can provide a valuable piece of information on price movements and trends. Learn how to read chart patterns to spot bullish and bearish patterns in the market. Here are some tips on how to use moving averages for successful trading. Identify the trend. The first step is to identify when the market is currently in an uptrend or a downtrend. If the price is above the moving average, it's in an uptrend. If it's below, it's in a downtrend. Use multiple time frames. Different times can help you understand the trend and the potential trading opportunities. For example, you could use a 4-hour chart for a trend analysis and switch to a lower time frame chart like the 1 hour for the entry. Wait for price confirmation. Before making any trades, wait for price confirmation. Make sure that price has broken through the moving average zone and will continue in that trend. This could be a candlestick pattern or other technical indicators at the retrace to the moving average. Notice here we have a cross retrace and an area where price is oversold. Being oversold in the oscillator is one confirmation of the retrace. Consider crossovers. When two different moving averages cross over each other, it can be a signal that a change in trend direction has occurred, and it could provide a potential trading opportunity. To make wise trading decisions on a 4-hour chart, try following this simple trading strategy. Plot two exponential moving averages, EMAs, using different periods. For example, you can plot one EMA 200 period and one with a 50 period setting. You can enter the trade when the shorter EMA crosses over or below the longer EMA. This is known as a crossover, and it indicates a good entry point in the longer term trend direction. Once in a trade, wait for the indicators to reach an overbought or oversold level before exiting. This helps avoid premature exits and maximizes profits. By understanding trend behavior and utilizing moving averages to identify strong trends, traders can buy low in uptrends and sell high in downtrends.